We're excited to have Gibraltar as our next presenter. Representing Gibraltar today is Bill Bosway, CEO, and Joe Lavecchio. Bill joined Gibraltar in 2019, and Joe joined the company in August 2024. Gibraltar Industry is based in Buffalo, New York, has 4 operating segments: residential, renewable, ag tech, and infrastructure. Gibraltar Industry has 30 million shares, traded around $67 for a $2 billion market cap, has $270 million net cash, and a total enterprise value of $1.8 billion. Bill, thank you for joining us. Do you have any, you want to start with overview of the company, or should we go straight into Q&A?
I'll give just a 5-minute overview, and then we'll jump right into Q&A and try to answer any questions anyone has. So thanks for having us, Simon. We're excited, obviously, to be here, talk a little bit about what we're doing. Simon give you a kind of a brief overview. We do have 4 segments. Our residential segment is our largest. And inside the residential segment, we really focus on the repair piece of the segment versus new construction. We benefit from both, but about 85% of what we do is really repair. We're not in the remodel world. And the reason I say that is a lot of what we do centers around the roof, and not many people remodel their roof. They fix the roof when they have to, or they put a new roof on a new house. So the other piece of our residential business, which is quite large, is mail and package. We're the largest supplier of mailboxes and centralized mail systems for the U.S. That's a really interesting industry. It's got a natural moat built around it, believe it or not, and we've been in it for a long time. And then we have a small home improvement business that is really focused on awnings for outdoor use, as well as some gutter protection. Then you jump into our renewables business. We've been in that for quite some time. It's our 10th year being in that space. We bought a company that started at the beginning of the industry, and that's been an interesting whirlwind the last few years with a lot of stuff going on in markets. I'm sure many of you are familiar with that. It's inherently a good business, and I think it's positioned well to participate going forward, regardless of, there's a lot of rhetoric around what's going to happen with renewables, particularly solar. And in reality is, I think, it's been a solid contributor over the last 20 years across a number of administrations, and will continue to be. And I remind people all the time, when Trump was in the office in his first term, he's the only president that actually extended the ITC benefits and raised them for the solar industry. So in a way, we feel pretty good about that coming back in. And then you jump into our ag tech business, which is a combination of things, but it's a business that, again, it's 80 years in the making. We've owned it for, again, 10 years. And it's a combination of things where we are designing and manufacturing and installing large facilities to grow produce. These are highly automated, very high-tech facilities that we take from a piece of land and all the way through, hand over the keys to a grower. And you can imagine in most of these facilities, if you've ever seen one or been in one, they are massive in size, anywhere from 100 to 300 acres. That's a number of football fields, or think of it in terms of, one of our larger ones we built has the middle aisleway is over a mile long. So they're good sized projects, but inside that there's 30 subsystems that really have to interact together. And we actually design and build those and buy those out and integrate them. We do both new builds and large retrofits, and just in 2024 started doing some services for these ongoing operations. So some recurring revenue starting to percolate for us. It's a very private company run industry. It's not new. People get it mixed up with things like vertical farming. This is not that. These are farmers that have been in it, and they're in the 3rd generation, going back 30 or 40 years. I think our biggest customer has been at it for 40 years, started by his father. Now he's run it for 40 years. These are I'd say very large companies, probably doing anywhere, from $1 billion to a little bit more of annual revenue of food production. A lot of it's centered here in North America, mainly in Ontario, Canada. And then, they're shipping on average probably 750,000 truckloads a day into the U.S., mainly to, obviously, supermarket retailers. So it really is an interesting business. There's a lot of money flowing into this space. I'd say the last 4 or 5 years in particular, now that Cox Communications is heavily engaged, Larry Ellison's group's heavily engaged, but these ongoing and these growers have been in it a long time. It's a well-established space. So we're excited about that because we know there's more people than food, and there's a way to be disruptive in terms of how you get food to the table. And if you can do it in a good economic way, which these guys have proven you can, it's a good space. So that's our ag tech business. We also do some other things in ag tech. If you think about structures, whether it's a large greenhouse, we have over 100 different universities we're building ag tech research centers for. We have a car wash business. We do large greenhouses for plants and flowers. We do botanical gardens. So like I said, we've been in it a long time. Knowing how to grow things in a controlled environment is a core skill set, along with our structural engineering and ability to put things in the ground and do it well. And then lastly, our smallest group is really our infrastructure business. It's about $100 million. It was once part of a bigger group within Gibraltar. We called it our industrial and infrastructure business. We actually divested the industrial piece of that 4 or 5 years ago. And it really focuses around bridges. We do a lot of bearings and other structures that go into these bridges. We do a lot of sealants, et cetera, particularly for runways, et cetera, both military and commercial airports. And then we have a fiber optic business where we're helping folks put fiber optics in the ground with a seal that we've developed that's patent and exclusive to us. So it's kind of an interesting business. I would say in general, our biggest challenge has been renewables. If you look at our information, that's what you'll see. Our residential businesses had a pretty good run. Our infrastructure business had a pretty good run. And our ag tech business is really starting to spread its wings and will be a pretty strong contributor as we get into 2025. Renewables end market challenges have been there. They're still there. And we can talk about that through some Q&A. But I would say the portfolio today is much simpler than it was. It doesn't look like it on the surface, but we had 19 different operating companies 5 years ago or 6 years ago. We have 6 today. And 2 of those groups, ag tech and renewables, used to be one reporting segment. We split those out for focus. And so really, those 2 split into 2 separate ones. Then we have the infrastructure piece and we have residential. So I think you'll see us continue to evolve the portfolio, continue to simplify, focus on the things that matter most, like we've been, and looking for those end markets that make sense for us. So I'll stop there, Simon, and take any questions unless you have anything specific you want me to touch on I didn't touch on.
No, great. Thank you, Bill. That's a great overview. Let's begin with your largest business, residential. It's account for half of your company. Business done really well over the last 4 or 5 years. Grew from 500 million to 800 million, almost 800 million in revenue. EBITDA margin near 20%, one ahead of your target set in 2025. What's the outlook for the segment over the next couple of years? I know participation gain is a key component of that. Can you talk about some of the new markets that the business plans to enter in new terms and as well as new product introductions?
Yeah, that's a lot. So I'll give you our 2028 strategy guide. No, it's a good question. So I would say, we think of the business as it's done relatively well. It's got a lot of runway in front of it, both top and bottom line. People ask us all the time about our margins, and I wouldn't say we're overly satisfied or impressed with them. I think we've gotten to a respectable level, but I think, and it gets harder as you get a little bit better there. But knowing what we know about the business and where we can take it, yeah, we feel like there's opportunity to run there. Top line as well. Though philosophically, the way we think about it is, look, let's not assume the market's going to help you every year. So how do you grow? And so that comes down to participation. And I know that sounds pretty straightforward, but in this space, we don't have what you would call high-tech product lines that, that's not how this industry works. It's all about speed. Obviously, you have to have the right price points, and you've got to have the right cost structure. But it is about speed and being local. And people don't realize just how local you have to be successful. So you've got to break down the top 40 MSA markets in the U.S. and figure out what it is you're going to do in that space. And we've done a pretty good job the last few years of understanding where we are and where we're not. And that really sets the tone for how we're going to try to drive our participation. And that sets kind of our priorities about where we go next. So, initially when I joined, it was about getting the business back on its feet, start to perform like we thought it could. And part of it was just getting the right regions in focus and making the investments accordingly. Now we've transitioned to the top 40 MSAs, and that has really driven us the last couple of years. Now that drives everything from investments we're making either through organic or through acquisition. It drives our new products that we're developing or launching. And again, when you think about this, I know because we don't study our roofs on our homes very closely, but ultimately at the end of the day, everything we do on the roof is stuff you tend not to see, whether it's ventilation for your attic or trims and flashings. But what you may not realize is you go city to city, those trims and flashings are uniquely different, whether it's color, size, material, thickness. So having something doing well in Boise, Idaho doesn't necessarily mean that 3 hours away in Salt Lake that it works, because it doesn't. So being as local as you can with the right 80-20 initiative and having service levels that are, a day or less, almost will call kind, allows you to, one, serve your customer in a much faster way. But when you think about how the industry works, if rebates are negotiated at the national level, the branch managers have some autonomy to decide whether or not they go after that full rebate or they trade that off for better service. So oftentimes you can manage your rebate agreed to down to a low level because you're providing something that no one else can. But that makes a big difference when you think about margin profile and what you can do. So the more local we get, the better off we are, the more profit share opportunity we have by actually managing that piece of the business. Secondly, with that, the one thing that kills you in our industry, our stuff doesn't ship well long distances. And so transportation is a big deal. And when it starts going north of 10% of sales, that's a problem. Well, how do you manage that? And so as you think about going more local and you think about your 80-20 strategy for that specific market, your transportation plays a big role. That's another element of profitability opportunity for you as well. So, and then you sprinkle in new products that maybe others don't have that perform better, and that's an opportunity. So whether it's the top line or the bottom line, it's all comes down to those three elements of operating engine that you have to have really geared for the specific MSA. I would tell you that's a huge transition for us versus 2019 when we were just trying to figure out how are we more present in the big box retail space, which was 70% of our business. Fast forward to today, we flipped that. 30% of our business is really big box and 70% is through wholesale, which serves the majority of contractors in both repair and new construction. So, we've done a lot of work on the channel. We've done a lot of work on the products. We've done a lot of work on getting closer to the market, and we still have a lot of gaps to fill in. That's the good news is, we don't have the lion's share of everything. And I'm happy about that because if you can grow 300 million and still have a lot of runway in front of you, you don't necessarily need the market to be robust every year for you to drive growth. You just need to be in the right markets, doing the right things and gain participation versus others. And that's kind of fundamentally how we think about residential. So it's not rocket science. You're probably not impressed with the thought process per se, but it is fundamental in terms of how we think about it. And that's what drives a lot of what we do.
Great. Touching on the renewable segment or the solar, your solar business, you mentioned that segment has faced a lot of challenges over the last few years. Has some of those, can you give an update on that industry? Has some of those headwinds start to abate and turning into tailwinds? Just an update there.
Yeah, so just for everyone, if you know the solar industry, you'll get this. If you don't, there are really two segments. There's utility scale, and there's what we call community solar or distributed generation. And we live in that smaller size field world, and they don't have the same competition. They have the same technology, but you don't compete with the same people, and the way you serve it is much different. A lot of what has happened in the industry has impacted, regardless of which of those segments you serve, has impacted everybody. And up until the new administration, the issues really revolved around either regulatory or legal, and or just supply chain. and some combination of those three. And for every individual item that came on the list of things to deal with, another one would come, and then people would start to see how those various things actually interacted with each other. And that was probably culminated in probably the biggest challenge in the last couple of years is how our customers are navigating through the legal challenges that are being presented, how to utilize the IRA, how to navigate through Department of Commerce investigations, how to navigate through the UFLPA, a lot of things that actually impacted the solar industry. I would say that we're finally, for the first time in the last 3 or 4 years, the Department of Commerce investigations have concluded. There were 2 of them. First one's done. Final rulings are out. The second one is also done, and the final rulings are coming out in April. So that's caused a little bit of, and the reason it causes people to pause is they just need to know on the rulings what the final cost will be, because they're really about the issue of importing panels. So effectively, you're going to tag some more tariffs or some more costs associated with bringing an imported panel in. And they just want to make sure those numbers are final. So that just causes people to pause. But this is probably the first time in the last 3 years where we haven't had a large investigation going on or some other deadline that has to be hit by the industry. So 2024 had 2 investigations that were interactive. We had the finishing up of the presidential proclamation. That was a 2-year window that you could bring panels in regardless of the DOC investigations. But that finished in June. And then if you did bring panels in that 2-year period, you had to get them installed by December 3rd. So you can imagine if you're a developer or a customer trying to figure out what is what and what do we have to do by when. And so it was a little bit chaotic really the last couple of years. I think that chaos piece to what I just described is not 2025. So now everyone's concerned about, well, what does 2025 look like now that there's an administration? Are they going to slash the IRA? They're going to slash renewables? And I would suggest that for 2025, we don't really see much change at all. There could be some modifications, but you can't change the IRA overnight. It's going to have to go through some reconciliation bill. I would look forward towards the end of the year. But if you actually listen to the rhetoric, the new administration has not really said much about solar. They've talked about offshore wind and EVs, but also remind people that when Trump was in office his first term, he's the only president that actually raised the ITC benefit and extended it before he left. And there's a lot of red and blue states that are heavily invested in solar. And so it is substantial relative to job creation and what it's doing. But I do think the administration is going to look for ways to lower overall energy costs, because that's the single biggest input for inflation that everyone's dealing with, whether it's at home or at work. So I do think you'll see more balance, but that doesn't necessarily mean something's going to be taken away or it's going to be thrown away. I think they'll be modified. And our plan is assuming that things hold for now, and you'll start to see some things in 2026. But, talking to customers, think about it. If you buy a piece of land and you're going to put solar on it and you're going to generate energy, that process can be anywhere from 3 to 7 years. So whatever happens in between happens in between. And so talking to one of our largest customers a couple of weeks ago, he said, look, I've already spent $4 million on this project 4 years ago. I'm going to see it through, but that's the way it's always been in this space, because it takes that long from the time that you make that decision. Doesn't mean it's not disruptive. It doesn't mean that it doesn't push things around, which is what we've seen. But the reality is people are not mass exiting solar because of the new administration. They've been more frustrated with the last 3 or 4 years than they probably are worried about the next couple. And I'm sure it's case by case. But I guess my message to everybody is I think the end market's solid. Texas is the largest producer of solar generated energy. That's not going away. It plays a role. It's important. And we feel pretty good about it going forward. And hopefully we don't run into another set of self-inflicted wounds for the industry driven by ourselves. And we're not anticipating that being the case going forward, which I'm thankful for if it works the way that we expect it to. So that's the latest on solar.
Great. Moving to AgTech, we're finally seeing some orders come in. You also made an acquisition in January. Can you talk about that segment, the growth opportunities there?
Yeah, AgTech's going to play a pretty big role for us going forward. we talked in 2021 about what it could be in 2025. And I would say that, we're not, we're going to be moving in that direction in 2025 for sure. We got there a little differently than we thought, but there's been a lot of things that the industry's navigated through. But the momentum right now is pretty good. And we're seeing it in the strength of our orders. I talked about, we signed just in 6 weeks about $45 million in new orders. That actually was a much bigger number that we signed, but we only count and only talk about what we've signed and have backlog or have deposits for. That's a discipline we've always had. We do that for solar as well. But when I think about really what's in front of us, it's pretty interesting to see the investments that are going in and the folks that are investing. I think a lot of people have a perception this is a brand new industry, and it's not. It's 4 decades in the making. These growers are pumping 750 to 1,000 trucks a day of produce into both U.S. and Canadian supermarket retailers, and been doing it for a long time. These are not fly-by-night growers. They're making as high, big as $1 billion a year of revenue. So they've been around a long time. It's just the industry is very private owned, and so it's really hard to get comps. It's hard to do some research. This is not vertical growing that you've probably read about. This is a well-established farming and very high-tech facilities that we design from scratch based on what you're going to grow. And we design and build and outsource a lot of the subsystems that go in. And depending on what you're going to grow, you might have 30 subsystems, but think of it highly automated, a lot of AI, robotics, et cetera, that go into actually growing in these indoor environments. So, when you think about disrupting the food chain, early in my career, I spent a lot of time trying to figure out how to get food around the world, as well as medicine in refrigerated containers and so forth. And really what this is doing is saying, you don't really need that anymore, because we're going to pick, pack, and ship in a day, and it's going to be fresh. And we're not going to have to put chemicals in it to, hold shelf life for the next 6 weeks when it's on a container. So there's more to it than people might think, but the reality is there's more people than food. And I think the growers really understand that. And that's why you start to see more and more money get attracted into that space. The other piece of the business that we do, and part of the acquisition that we did, is called Lane. We do a lot of, as you can imagine, whether it's a large produce facility, a botanical garden, a car wash, a research facility for any one of our 100+ universities we build for every year, large growers for plants and flowers that feed your nurseries. It's all structural engineering. And structural engineering, along with understanding subsystems and what you're growing and what you need to have success there, is kind of what we grew up with for the last 80 years. When we bought Lane, what we did is bought the exact same skill set. We just added more end markets. So when you think about some of the trends going on in canopies, we do solar canopy business today. As an example, we just finished up the last phase of the Cincinnati Zoo, second largest zoo in the country, right? Well, we've completed. The entire parking lot is now canopy solar. It actually powers 95% of the zoo. That's where it gets its energy now. That's the kind of stuff we've been in for a long time. What Lane does is it brings us some additional markets at a bigger scale. So yes, they do design, engineering, manufacturing, installation, just like we have always done, but they've added in market segments for us. So it's a great way for us to leverage a skill set that's been around a long time, gets us into an end market that's growing mid-single digits. And there's some really interesting trends going on in that space. And the market itself has a lot of room for us to play a bigger role as well. So we're excited about adding that to the family, if you will, leveraging some things we've been doing a long time. And there's as much synergy in both directions, which is also kind of cool when you do something like this. So yeah, we've been owners for about a week and a half, and looking forward to a good run with the team. It's a great team.
As we're coming up on time, I just want to touch on your balance sheet and capital allocation really quickly. $270 million cash on the balance sheet. What are your capital allocation priorities?
Well, we still have some in our buyback program. We still have some dollars left in that. We'll continue to buy back shares. It makes sense, but really it's about deploying capital. And I would just simply say M&A. There's a lot of activity out there than there was a year ago, 2 years ago. And so we're pretty excited about that. And you'll see us put some money to work. And I would say stay tuned on that as things evolve for us this year. So I'd say most of that focus is going to be residential and probably the ag tech space. And I'd suggest, there'll be anywhere from, deals that would be 10 million EBITDA to maybe 100 and everything in between. There's some really interesting things that, frankly, we've been working on for the last 3 years. So, some of those things are now coming to market, and we're excited about the opportunity.
Well, there. Thank you, Bill. Thank you for joining us today. It's been really fun. We look forward to having you back next year.
Yeah, I look forward to it. And anyone in the audience wants to have additional conversation, please feel free to reach out to us. Always happy to get you up to speed on what we're doing.
All right. Thank you.
All right. Thanks, Simon. Take care. Bye-bye.
This podcast is an excerpt from Gabelli Fund's 35th Annual Pump, Valve and Water Systems Symposium. GAMCO is providing these links as a matter of general information. We do not intend for these links to be a complete description of any security or company, nor is it a research report with respect to any of the companies mentioned herein. As of December 31st, 2024, affiliates of GAMCO Investors Incorporated beneficially owned 5.1% of Gorman Rep, 3.3% of Graham Corp, 2.65% of Enpro, 2.44% of Watts Water Technologies, 2.41% of Mueller Water Products, 2.05% of Flowserve Corporation, and less than 1% of all other companies mentioned. One of our affiliates serves as an investment advisor to Crane Company or an affiliated entity and has received compensation within the past 12 months for these non-investment banking securities-related services. The analyst's views are subject to change at any time based on market and other conditions. The information in this posting represents the opinions of the analyst and is not intended to be a forecast of future events, a guarantee of future results, or investment advice. Views expressed are those of the analyst and may differ from those of other GAMCO officers, analysts, other employees, or the firm as a whole. Because the investment personnel at GAMCO and our affiliates make individual investment decisions with respect to the client accounts that they manage, these accounts may have transactions inconsistent with the information contained in this posting. Certain GAMCO personnel may know the substance of the posting prior to its posting. This webcast is not an offer to sell any security, nor is it a solicitation of an offer to buy any security. Stocks are subject to market, economic, and business risks that cause their prices to fluctuate. When you sell shares, they may be worth less than what you paid for them. For more information, a prospectus, or summary prospectus, visit our website at www.gabelli.com or call 800-GABELLI or 800-422-3554-914, 921-5100 fax, 914-921-5118 info@gabelli.com.